Hello everyone. Welcome you all to another session of Banking and Financial Services class. I am Impa Biliappa, Associate Professor, Department of Management Sciences, Maharaja Institute of Technology, Mysore. In my previous introduction class, you have got an insight of our college, department and subject. In today's class, I will be starting Unit 1, which is the structure of banking in India. This unit covers the functions of RBI, structure and functions of commercial banks, monetary system, sources of funds, quantitative and qualitative measures of credit control, banking sector reforms, bank performance analysis and future of banking. But today I'll be covering two topics, that is structure of banking as well as functions of RBI. Structure of banking in India. First, to start with, let's know what is a bank. A bank is a financial institution which provides the banking and other financial services to the customers. There are two categories of people, that is individuals as well as the businessmen. For individuals, it is a part of savings where you bring in your savings and deposit in the bank and retrieve interest for it, or else you can convert that into fixed deposits, or when you need loans, you can approach the bank and get the loans. But for businessmen, it is a form where they can rely on for the purpose of investment, where they can contact the bank for the purpose of loans for businesses. A bank is generally understood as a financial institution that provides the fundamental banking services such as deposits and providing of loans. These are the primary functions of a bank. And to this, the non-banking institutions also play the role of providing services without meeting the legal definition of the bank. Next, the banking sector is divided into two sectors, that is organized sector and the unorganized sector. The organized sector is mainly composed of commercial banks, cooperative banks, discount houses, acceptance houses and land mortgage banks. But the unorganized sector is outside the control or purview of the central bank, which is the RBI, and there is lack of uniformity. They differ in their regulations from one to another. In India, the examples of such banks are indigenous bankers, money lenders, traders. These are all the examples for unorganized sector. Coming to the structure, RBI has segregated the banking sector into two sectors, that is scheduled banks and non-scheduled banks. Let's see the definition of scheduled banks. The definition of scheduled bank is the banks which have been included in the second schedule of RBI Act 1934. Those banks are known as the scheduled banks. These banks have to fulfill two basic conditions. That is the first condition, where the paid-up capital and the collected fund of the bank should not be less than 5 lakhs. The second condition is any activity of the bank which will not adversely affect the interest of the depositors. These two are the basic conditions which is to be qualified as to be called as scheduled banks. If they are the scheduled banks, what kind of facilities do they enjoy? The kind of facilities which they enjoy is they can get loans or debts from the RBI at bank rates. That is the first advantage. Another advantage is they acquire the membership of clearing houses through which they can settle and clear various other deposits. And the third advantage is where they rediscount the first class exchange bills. They get the facility of rediscounting the first class exchange bills. These are the advantages of being a scheduled bank. Let's see the next, which is non-scheduled bank. Non-scheduled banks are the banks which are not included in the scheduled bank. That is the only difference. And coming to the, in this they have to follow the CRR condition. The CRR condition is, even like the regular scheduled banks, the non-scheduled banks should also have the CRR fund with them, but there is no compulsion that it has to be deposited with RBI. And also, they don't get loan facilities for their day-to-day activities from the RBI, but only in case of emergencies they can avail that. Okay. Coming to the scheduled banks, there are two different categories in the scheduled banks. that is the commercial banks as well as the cooperative banks. Under commercial banks, there are different heads which we'll be discussing on now. The first head under commercial bank is SBI. Okay, SBI, that is the State Bank of India, very famous, the high prioritized bank which has placed in the global banking index within 200 position. Okay, SBI is an Indian multinational public sector banking and financial services which is a statutory body, and its headquarters is in Mumbai. You might be knowing that in 2017 a merger happened, and in that merger State Bank of Mysore was one of the associate which merged with the State Bank of India. The different subsidiaries of State Bank of India is SBI Capital Market, SBI Cards and Payment Services Private Limited, and SBI Life Insurance Company Limited. The second one under the commercial bank is the nationalized banks. In 1969, July 19, Nationalization Day came into existence, where all the 14 banks were nationalized by the Government of India. According to IMF, nationalization is a process where the government takes over the private assets and brings them under the public ownership. These nationalized banks are also called as public sector banks. Examples of these nationalized banks in India are Syndicate Bank, Vijaya Bank, Canara Bank, Allahabad Bank, and Corporation Bank. What are the objectives of this bank? Why these banks are so important, and why are they formed, or why are they nationalized? When it comes under a common control, they will help us to bring social welfare, reducing regional imbalance in the sense of rural and urban areas, to strike a balance between rural and urban areas so that the development between rural and urban areas go hand in hand. Okay, so that is regional, to avoid or reduce regional imbalance, expansion of banking facilities, and developing of banking activities. It might be in terms of savings, or it might be in terms of investments. The third category under the commercial banks is the regional rural banks. The name itself signifies it mainly concentrates on the rural areas. These are the Indian scheduled commercial banks operating at regional level in different parts or different states of India. This gives facilities to the rural people, and also they can open up their branches in urban areas, facilitating for urban people too. Their ownership is divided into three categories: central government, state government, and sponsor bank. The central government holds ownership up to 50%, state government holds ownership up to 15%, and sponsor bank holds ownership up to 35%, and all are regulated by the NABARD. The examples in Karnataka of regional rural banks are the very famous Karnataka Gramina Bank and Karnataka Vikas Gramina Bank. And what are these functions? What are the functions of regional rural bank? Why it is so important to have a regional bank in the rural sector? Because it provides banking facilities to the rural people and semi-urban people, and also it distributes disbursements, the wages which come under the Mahatma Gandhi Rural Employment Guarantee Act to the workers, and it also distributes the pension. Like this, the disbursement of cash to the rural people is done through these banks. And also it provides para banking facilities like the general facilities which is given in the urban cities too, locker facilities, debit cards, credit cards, mobile banking, internet banking, UPI facilities. All these are provided in the rural regional banks too. The next bank which comes under the category of commercial banks is the foreign banks. What is a foreign bank? A foreign bank with the obligation of the following the regulations of both home country as well as the host country. Home country is the country which where the bank butts up. Okay, host country is where the bank has set up its branches. Foreign banks are defined as a bank from a foreign country working in India through its bank branches. In India, you can find examples such as HSBC, Standard Chartered Bank, American Express. But there are certain regulations which which make the foreign banks to abide by the rules of RBI, such as the first one is the loan limit. Okay, the loan limit is depending on the parent bank assets of the, or capital of the parent bank. Based on that only they can provide the loan. And foreign banks are to adhere by the mandate capital adequacy requirement as per the Basel standard, and also they should be having minimum capital requirement of 5 billion and normal capital to risk weighted assets ratio is 10% for the regular priority sector targets, but foreign banks it is 40%. And this is the CRAR what I am telling about, that is to protect the depositors. Okay, coming to the next, that is the last one. Till now we have discussed about the public sector, foreign and regional banks. Now we are discussing about the commercial banks which are private. Okay, that there is no much difference between the activities of public sector banks nor the private sector banks. The difference is only in the form of capital. In private sector banks, most of the capital is held by in the private hands. The ownership, the controlling, everything will be there in the private hands. The regulations will be from RBI. Examples of such banks in India is HDFC, ICICI, Kotak Mahindra, Axis, Karur Vaishya, and the very famous Yes Bank in recent times. The next comes is the cooperative banks. Till now what we have discussed is the commercial banks, which are private and public both, and now we'll be discussing on the cooperative banks. Now, what is a cooperative bank? A cooperative bank is a financial entity which belongs to its members, and at the same time where the members are treated as customers and owners of their bank. Cooperative banks in India are registered under the State Cooperative Societies Act. It is regulated by RBI and governed by Banking Regulations Act of 1949 and Banking Laws, that is Cooperative Society Act of 1955. To be called as a cooperative bank, what are the features it should pertain? One of it I've already told, where it is customer owned entity, means the customers are owners, where they are members, they are into three roles. One is the member, they are the owner, they are the customer. Only members can avail the facilities. That is the first feature, or it is a kind of advantage too, because the loans and all are available at lesser interest rates. And the next one is it's a democratic member control. Democratic member control in the sense the members jointly elect the board of directors by using their voting powers. Voting powers in the sense they follow the rule of equality, where one vote is one person. One person has got one vote. Due to using that, they elect the board of directors to that, so that among them only there will be a member who is also a board of director. And next is profit allocation, where in cooperative banks, whatever profit or surplus they get, that is a part of it as reserves, and some part of it is distributed among the members of the cooperative banks. And it also plays a major role in financial inclusion. Okay, coming to the next, this is related to the structure of banking in India. Coming to the next topic, which we'll be discussing is functions of RBI. So first to that, let's know what is RBI. All will be knowing what is RBI. Even then, let's glance upon what is RBI. RBI is a bank which is set up according to the Reserve Bank of India Act of 1934. It is the highest monetary authority in the country which makes rules and regulations for scheduled and commercial banks in India. The RBI, that is Reserve Bank of India, is the apex financial institution of the country's financial system, entrusted to the task of control, supervision, promotion, development and planning. It also influences the commercial banks through its various policies, directions and regulations. They follow the basic 4 principles of management, which is planning, organizing, directing, and controlling. So whatever they want to make the changes, the plans, policies and all, they first plan it, they organize it, and they direct it to the various commercial banks so that they follow it for the betterment of the society and see that it is properly controlled. Coming to the RBI, moving ahead with the RBI, the RBI's Act of 1934 has divided the functions of RBI into 3 categories, that is the banking function, supervisory function and promotional function. The main function of RBI is to regulate the money supply, which helps to helps for the circulation of money, and also along with this money circulation as a primary objective, but they do concentrate on the agricultural sector, they do concentrate on the industrial sector and also on the export promotion. Next is the first one, which is the banking function. In the banking function, almost all our primary functions are covered. The first banking function, just now I've told you the primary function, which is the bank of issue. So as you all know, RBI has a separate issue department which is interested to issue the currency notes, which will be circulated throughout the country as well as in the foreign countries too. The asset and liabilities of these issue department are kept separate from those of the other banking department, and whereas Mysore is very famous for printing currencies and in the denomination of 2 to 10,000, and 1 rupee, as you all know, it is from government of India, and RBI also has the right to decide at what denomination it has to print the currencies. Coming to the next banking function is bankers to the government. It acts as a banker, it acts as an agent, it also acts as an advisor to the government, or it might be state or central, where it gives ideas, advises, and also acts as an intermediary between the various activities of the state as well as the central. One which is not included, the one state which is not included in this is Jammu and Kashmir. Coming to the third banking function, it also acts as a banker's bank, means for the banks it acts as a banker, where according to the Banking Companies Act of 1949, the scheduled banks had to maintain a minimum cash balance of which is equivalent to 5% on its demand liabilities and 2% of its time liabilities. So bankers bank means providing of loans to the other banks or keeping their deposits in the RBI, that acts as an which builds the relationship between RBI and other banks. Coming to the next banking function, which is controller of credit. Control of credit, that is credit control, will be taking up again in the coming concepts, but to have an introduction to that, it acts as a controller of credit, that is the power to influence the volume of credit created by the banks of India, where they are going to change the banking rate or through open market operations. Okay. The last function under the banking functions is the custodian of foreign reserves. So as you all know, to print the currencies just like that, you cannot print according to your mindset, or you cannot print according to the need. It is only on the basis of the gold reserves and foreign currency reserves which RBI has to maintain. Based on that only you can print the currencies, and also the foreign currencies exchange, that is the exchange rates for the currency fluctuation from one country to another, all these are managed by RBI. Next is the supervisory function. Coming to the supervisory function, so I've already told you all that it happens to maintain the management functions, which is planning, organizing, directing and controlling, and supervisory function is one among that, where the control over the commercial and non-cooperative banks are more, where it might be related to licensing or establishment or branch expansion or liquidity of their assets, management and methods of working, amalgamation, reconstruction or liquidation. Any such activities are there, RBI plays a supervisory or controlling power where it deals and advises and helps them and supervises them. And coming to RBI is, it's also an authorized to carry out a periodical inspection. It has a right to have a periodical inspection of the banks, and also it can take whatever necessary information or call for returns it needs from other banks. It also directs the growth of banking and credit policies towards the more rapid development of the economy. Next type of function is the promotional function. So promotional function with promotion means advertising, motivating people, helping them to make more savings. So more savings will lead to more investment, because more savings if you get, they keep it in the form of deposits, and the money will be rotated within the country, and the same savings is being given as loan to different people, through which interest is generated, and automatically when the interest is generated, which happens to be an investment to the businessman, this is a cycle where your savings are converted into investments. In the same way, to promote more and more savings, the promotional functions are taken by RBI, and to develop the regional balance, to have a regional balance between rural and urban areas, the promotion, the knowledge of banking sector to the general public is more important. So these facilities have to be extended to the rural areas, it has to be extended to the semi-urban areas, and also to the unknown people in the urban areas too, the people who doesn't have much knowledge about the banking sector. Due to this, and to help the small scale industries and all, they have set up the Industrial Finance Corporation, the state financial corporations. They have also set up Deposit Insurance Corporation, Unit Trust of India, Industrial Development. Like this, they have set up various banks, various corporations to help the rural people, semi-urban people, and also for the urban people, so that more of development activities can take place, more of investment can be taken through this RBI and invested in lots of business where the income generation is possible. This is about today's topic. Let's glance upon, and also to include this, they also concentrate on research and development. RBI also concentrates on research and development, where what kind of research they do. They do research as to what kind of currencies have to be printed, what is the need of printing that currency, or they also do research what kind of changes in notes and currency should be brought upon. And also it has an function of appointing the CEOs and chairmen of other banks, that is the previous which I have explained in the structural. For those banks, they appoint the CEOs and chairmen, and also they help in regulation of payment and settlement cycles. These are the other functions which you can include it along with the banking, supervisory and promotional functions. To sum it up all, today's class we have discussed about the structure of banking industry. In structure of banking industry, we have discussed about the central bank of the country, Central Bank of India, which is RBI, which is segregated into two different sectors, that is scheduled banks and non-scheduled banks. Again, in scheduled banks we have discussed commercial banks. In commercial banks we have discussed SBI, we have discussed nationalized banks, we have discussed regional rural banks, we have discussed foreign banks, and also we have discussed the private sector commercial banks. Along with it, we have discussed cooperative banks. And then in the non-banking sector, the other banks which are not been included in the national scheduled banks have been discussed, and the different kinds of functions we have discussed, that is the banking function, supervisory function, promotional functions and other functions along with it. So let's see you in the next video with the continuation of this, where we'll discuss about the structure of commercial banks and functions of commercial banks in detail. Thank you.